So financial services have a leading role to play in the diversity, equity, and inclusion agenda through making their services more accessible to the underserved communities, creating products that nudge their customers to do the right thing, but also directly as employers. And I'm joined today by Dan, John, and Colin, three financial services leaders utilizing technology to achieve better outcomes for customers and society. So Dan Henry has served as CEO and president of Green Dot Corporation since March 2020. Upon joining Green Dot, Dan refocused the 20-year-old fintech pioneer to give all people the power to bank seamlessly, affordably, and with confidence through best-in-class digital banking products like GoToBank, and through value partners like Amazon, Apple, Uber, Intuit, and others. Dan was also the CEO of NetSpend from 2008-2014, during which time he led the company through its IPO and ultimately an all-cash sale to TSYS Corporation for $1.4 billion. Prior to NetSpend, he co-founded Euronet Worldwide, a leader in secure electronic financial transaction processing, and has also been chairman of Paysign since 2018. John McLane is the Chief Operating Officer of Trustly, a global leader in open banking payments. John is an enterprise technology veteran with experience in driving profitable growth and helping enterprise customers to best engage and serve their consumers. But prior to Trustly, John built the customer success function at Chorus, a Vista Equity Partners portfolio company. And prior to Chorus, he was CEO of Waterfall, a mobile marketing SaaS company helping retailers in driving revenue growth. And Colin Walsh is the founder and CEO of Varo Bank, the first consumer fintech to be granted a bank charter in US history. He founded Varo to advance the cause of financial inclusion and opportunity for all. Colin is uniquely positioned to lead the digital bank revolution and has more than 25 years of experience in consumer banking at large global financial institutions. He led Europe's largest credit and charge card business at American Express, and also led the UK's largest mortgage and savings businesses at Lloyds Banking Group. So we've got an esteemed panel today, and let's jump in. And our first question for you today is for Dan. Dan, financial inclusion is often characterized as the idea that every adult is connected to the financial means, just as he or she is connected to the means of electricity or means water. How does serving lower income customers and other underserved groups affect how you design and develop financial products?
Thanks, Noeleen. Thanks for that question, and thanks for having me here today. I really appreciate the opportunity. When we talk about serving low-income consumers with financial products and financial services and banking, I think it's important to kind of first start with the fundamentals of understanding the traditional banking system, and for hundreds of years, how the banking systems were designed. And fundamentally, what I've said for my now 15 years of serving low to moderate income consumers in the US is traditional banks were designed to serve consumers with money. So if you just think about it, it's designed to excess capital deposit in the bank, we'll hold those funds for you, we'll loan those out, we'll pay you something for holding those funds. A low to moderate income consumer, which in the US today, there's more than 100 million consumers living paycheck to paycheck. They don't have a large amount of excess funds. So they don't need a bank account in the traditional means of banking. They need a transaction account. They need help to facilitate, ease of movement of money. They need the access to those funds, get paid faster, be able to know what their balance is, help them make the shift from operating cash to operating digitally. So I would say that first, when it comes to serving low-income consumers, the products, yes, are important, but before you can get to the products, I think you have to kind of change the entire approach and playing field. And it really comes down, in my opinion, to cost and scale. The old model of having a bricks and mortar branch to be able to serve low income just isn't going to cut it. So what we have here at Green Dot is we are a bank. So we've actually received our banking charter now more than 10 years ago. So we are a regulated financial institution. And with that bank, from that one bank, we have 90,000 points of distribution. So if you think about that, we have more retail locations through our partners than all the bank branches in America combined. And that's with no incremental cost to us because we leverage the bricks and mortar locations of partners like Walgreens and CVS and Walmart and, like I said, Family Dollar, Dollar General. We have a location within 3 miles of 95% of the population of the United States. So first, we have the bank charter, we have distribution that we're not paying for. We have our own technology processing platform. So we have very low cost of operations. So first you have to get there. And then you have to spend time understanding, who is your customer. So getting them paid 2 days faster is really important to them. Giving them devices where they know what their balance is at any given time. What we're very focused on now in terms of next generation of products is how can we help our customer build credit? And I think this is really, really important because for decades I've been saying in America, it's expensive to be poor. Because in the United States, if you're poor, very, very often you have a thin file or no file when it comes to your credit score. And if that's the case, if you're doing anything from forget trying to buy a car, just trying to rent a place to live, you're penalized if you don't have a good credit score with 3 months of deposits for your rent and 3 months of deposits for your utilities and what have you. So first and foremost, you've got to get low cost, you've got to get scalability, you have to know your customer. And so that to me is where you have to come from. And I think that it's going to require new players in the industry to truly serve this low to moderate income consumer, because it does require a complete change of mindset of meeting this consumer's needs.
Thank you for that, Dan. I'd love to hear that you're changing the playing field out there and you're fulfilling the customer's needs. And on that, Colin, co-design of products and services with customers can be a real key to addressing vulnerability and inclusion issues. So how do you engage with your customers in this process, and how does technology enable you to better understand their needs?
Yeah, thanks, Noeleen. That's a great question. And really just building off of what Dan said, I think we're very aligned around our views on the segment as well as, what it takes to be successful. And by the way, we're a partner in those 90,000 outlets. So our customers use the green dot locations to deposit cash, so which is a great service. But since founding Varo, it really has been a co-development effort. One of my first early hires was a design researcher out of Instagram, where we spent a whole year just talking to customers, trying to deeply understand what are the pain points and how could we build a better bank that could really help move them towards a better financial life. And what we were hearing is and some of the themes that Dan was touching on. Speed is important. These are people who do not have a lot of money. Every dollar matters, every minute matters. And so designing a digital platform that could allow folks to move money, have lots of opportunities to move money and get access to their funds quickly. Other couple of themes that came out early on were around many of these people did not have savings and the ability to build basic financial resiliency and having access, even small dollar savings, to help weather unexpected expenses, because many of these customers do have fairly volatile incomes and cash flows generally and expenses. And so giving them the basic tools to start to build savings. And then the other areas, and this has really been a core focus for us, both before we became a national bank and certainly since we've been a bank, we've been accelerating these efforts, is to provide access to credit. And a lot of it is an affordable credit and credit that just helps in many instances bridge to the next paycheck, or make a purchase, but things that are essential to get by. And then the other point that Dan mentioned is helping many of these folks build credit or repair credit if they've damaged their credit. And so we have designed in the co-development with our customers sort of a complete solution. And I smile when I hear people talk about the super app. I like to say that, at Varo, we're trying to super serve a very large group of consumers. And as Dan mentioned, there's over 100 million consumers in the US that are trying to live paycheck to paycheck, and giving them the fundamental tools that are giving them a sense of greater control, greater stability, more resilience, and then ultimately a path to greater financial freedom. And part of why we chose to become a bank was to be able to work with our customers to design that full suite of products kind of as they're gaining greater financial stability into the next chapter in their lives. And so it's been an exciting 6 years since the company was started, and I feel in many ways we're just getting going and reaching a level of scale that allows us to deliver impact in a meaningful way.
Thanks, Colin. I really like that when you talk about tools for access is really key there for your consumer. And speaking of access more broadly, one for you, John, open banking is expected to be, a big driver in innovation in financial services globally, with some jurisdictions, taking a regulatory-led approach and others opting for a much more organic market-led approach. So how has open banking played out within the European context, and what role has open banking played in inclusion within Trustly?
That's a great question, Noeleen. Thanks, and thanks for having me. It's great to be here also with Dan and Colin, who are basically legends in the space. Very cool. Look, your question about open banking and how it's played out in Europe in particular. So Europe has taken a more regulatory-led approach to open banking, right? Under PSD2, effectively requiring ultimately all banks to make consumer data and account access available through a set of standardized APIs on the one hand, and on the other hand, requiring that consumers have the ability to revoke access and control the privacy and the access to their data. From a regulator standpoint, it's very forward-looking. This is really in contrast with the US, right, which is you have a much lighter regulatory touch up until today. The space is really dominated by the banks and the card networks, right? And they're all really trying to assess how to still win that consumer, which generally actually favors being open because consumers want new services. And at the same time, of course, the incumbents, right, they also need to protect their businesses from disruption, right, from the new players coming in. So on the US side, you've got some major banks that have launched data APIs, for example, but they're very cautious about granting access to those. It's a negotiation along the way. And a lot of banks, of course, are actually nowhere near that point. In Europe, it's funny, you might think that the regulatory action would have created a completely standardized landscape. I say that might have been the intent. The reality is actually much more noisy and diverse than that. Right. So whether you look country by country, I mean, the UK is an example of a place that's a little bit more standardized and sort of cleaner than others. Other countries are much, further, sort of further behind in terms of the implementation and the enforcement. But the other thing is, bank by bank, right? So the APIs aren't all built, right? They don't all work, and those that do work don't all work the same. Right. So actually, to shift a little bit to what Trustly is about, we're a payments company, right? And we're aiming to build a payments network that just works, right? It works for merchants, right? We're here to serve merchants, we're here to serve consumers, and we do everything in partnership with banks naturally, right? Everything we do is account to account. So in order for a payment method to work, to be ubiquitous, right, ubiquitously available to merchants and ubiquitously available to consumers, because that in fact is a crucial form of inclusion, right? We have to cover virtually the entire banked population of a market that we serve, right? So we're connected over 6,000 banks. We have over 500 million consumers are able to use Trustly today without having to open an account, without having to get approved or pass credit checks, et cetera. But when you look at the diversity in the space, right, that API landscape, which is so messy, which is so noisy, we actually have to do the hard work of kind of abstracting away from all of that complicatedness to build something that, one API, one contract, one relatively consistent consumer experience, and it just works. It works everywhere. Another couple points about the inclusion agenda for us. Cost is a big part of this. Right. And whether it's for the merchant or for the consumer. So, the card networks, of course, have enabled commerce. I mean, they were revolutionary, actors when they entered the space. Now, of course, they've reached a point where they also sort of drive cartel pricing. The open banking approach is to say, okay, payments can be democratized, and you can strip a lot of costs out of the system, which is helpful to merchants, right? I mean, with Trustly, you can buy 50% cheaper than cards, oftentimes for the merchant, because we're cutting out the middleman. And of course, the landscape there is shifting. You've got some pretty big players who are starting to try to take action. With, for example, Amazon, aiming to or announcing that they were dropping, Visa branded credit card access in the UK. That's a pretty significant, rock thrown into the pond there. But ultimately, we think we're on the right side of history, right? By giving merchants a way to transact with consumers that's modern, without the chargebacks, without the fraud, and with much lower cost. The final piece I would say is that our approach to consumers is that, this is debit, not credit, right? We're enabling people to pay with money that they already have. No interest, no fees, right? So you can have some flexible timing around when transactions settle, which gets akin to a buy now, pay later style product. But the underlying philosophy we bring to this is that we're not going to put somebody into debt. Right, we're not aiming to make money off of anything other than just the core transaction processing, and to do that in a very cost-efficient way for the consumer. So ultimately, we think that while credit can be incredibly important, it can also drive exclusion and some forms of economic inequality. People who can afford to pay off their balances every month, they sort of they reap the rewards, right? They get the points, et cetera. But anybody who obviously falls on the other side of that line can pretty quickly, end up in a spiral. We aim to avoid that. So.
Thanks for that, John. I do like when you say, Trustly is going to be on the right side of history. Something that's going to be on the wrong side of history, even on panels, we can't get away from COVID. And Dan, this one's for yourself. So the pandemic has proven to be this accelerant for digital adoption across sort of all industries in a way that none of us probably ever envisaged. So how has this pandemic affected how people access, manage, and move their money, particularly if they're not accustomed to banking digitally?
I think picking up on the right side of history and COVID and the pandemic, and I don't know. I mean, the pandemic is a tragic thing, but I think all of us have realized that we're going to be looking at pre and post COVID. What was the world like before COVID, and what is the world like after COVID? And we use this panel as an example. I mean, this is fabulous. I might be a little bit grumpy today because I'm wearing a suit because I'm in DC, because I have to come here and physically meet members of the Senate Banking Committee in person, as opposed to doing it effectively via Zoom. But and part of the conversations that we're having in today's meetings is exactly this accelerated shift to digital. And so I have to say, I mean, I'm super excited about this accelerated shift that's happened, where a lot of things that we had out in our plans and our product roadmap and my vision of where the world's going. I mean, for everyone, it's compressed. It's moved a lot faster. But I do think it's important, when just anecdotally we can talk about, I'm sure we all have many of examples of what the change did for us. And when I ran NetSpend before Green Dot, and now Green Dot, and Green Dot's been here 20 years, and we've been working to try to coax low-income consumers to move from being a cash-based consumer to be digital. And there's just a lot of resistance to do that. And I believe that the pandemic forced a lot of consumers into digital payments. We saw sales of our products in retail really shoot up dramatically, because you had a lot of consumers who were used to paying their cable bill in cash, and and where they would go pay that in cash, that office was closed, and they were forced to pay digitally. And so I think that there was a great acceleration in terms of acceptance and understanding of the benefits of digital payments. That being said, again, coming back to the consumer, okay, this is all about serving the customer, and nobody owns the customer. I mean, we have to show up every day, and I believe that for us, our competition is the user experiences that our customers get from, companies like Disney and Netflix and Apple and such. So we have to create, similar user experiences, and we also have to serve 100%, I believe, of the pie of the way the consumer moves money. Long way of saying that things are accelerating and going digital, but I believe that we have to realize and recognize that things will never be, or it'll be a long time before things are 100% digital. And so our ability to think about how do you meet the customer when they get paid in cash, when they need to deposit cash, when they got to pull cash out of the system, you still have to have that physical presence as well as a very powerful digital offering.
Thanks, Dan. I like that no one owns the customer. So I feel like, we have the power, we are very demanding, and we do have very high expectations. So with that, Colin, we know that the whole digital industry is maturing. What does that mean for the middle class consumer, and how will they stand to benefit in the next sort of 5 to 10 years?
Yeah, great question. And I think just building off of what some of the other panelists were saying, that COVID really has brought on an inflection point in many ways. I mean, so first, if you think about just how it has exposed so much of the inequities and inequality in this country, and the sort of disproportionate impact on people who are just trying to get ahead but have to work a couple of jobs or trying to make ends meet, communities of color. I mean, it really sort of put us in a bit of a cultural moment to reflect on some of the inherent inequities that exist, here in the US, but other parts of the world as well. And it's kind of created a bit of what we like to call the awakening. Like, people are saying, enough is enough. Like, I'm going to go work, I'm going to bring my business to companies that actually, authentically care about my well-being and want to help me get ahead, as well as finding solutions that are faster, safer, cheaper. And I think that all of that has sort of led to this sort of tipping point where more and more consumers are adopting digital solutions, and and the facts sort of speak for themselves. I mean, Novantas did this study that said in 2017 the number of customers that were opening up digital bank accounts was sort of in the low single digits, and in 2020 that grew to 24%. Then Cornerstone Advisors did a study that showed 5% of millennials at the start of 2020 cited a digital bank as their primary bank, but by January 2021, that number had grown to 15%. So I mean, like a tripling. So the other dynamic that's occurred is this sort of tipping point, and this switch attracted a lot of VC and private equity and and a lot of funding into the sector. And so you have a number of very well funded competitors in the space now that are building category awareness. So it's like the wheel is turning. So more customers are getting fed up and wanting to look for alternatives. Plus, there's just a lot more awareness of those alternatives. And so I think that at the end of the day, the winner is the consumer, because they're moving towards lower cost alternatives. There's more pressure on incumbents. It warms my heart when I see Capital One dropping overdraft fees, because at the end of the day, that's $150 million back into the pockets of everyday Americans, which is kind of why Varo exists in the first place, both what we can do on our own, but also the change we can influence more broadly around the industry. So, I look forward to a world, in the next 5-10 years where people do feel more financial security, that there is more economic justice in society, and that players like the folks on this call are helping to kind of usher that in. So I think it's a very promising time for many people, despite some of the hardship that has gotten us here.
Yeah, thanks. Look, the awakening, I love it. This is going to be a movie released. See it coming. Just picking up on what you've been saying around, yes, big shift to digital banking gives us 24-hour access, lower costs, really efficient. And, Dan, you picked up on the fact that, it's vital that we don't leave people behind. And here in the UK, we've done these studies, and we know that people on higher incomes are more likely to use the internet than those on lower income. So for you, as banking and other services do become more digital, what role do you see cash and physical branches playing?
Well, I think that, when you talk about not leaving people behind, I think that I guess what I've been doing this for like 15 years here in the US, and just to see the evolution of the technology that's taken place. Back in 2008, when we were doing this, we, with our direct offering, you would have to assume that your consumer, for the most part, they would access you through the internet, through a computer, and many times that computer was at work. And now what you have is every consumer walks around with a computer in their pocket, many times with 5G capabilities. So I believe, in terms of the question of leaving consumers behind, technology in the free market is really creating accessibility and ubiquity of these solutions for the consumers at a very low cost. And I echo Colin. I think that we are part of driving change in the industry. And the market and the opportunity is tremendous. And the ability for many of us to serve the consumers and be very successful at it, I think, is very broad. And the consumer is the one who will ultimately win. But what I'm very proud of, what we have here at Green Dot, is just the tremendous breadth of assets that we have. So we have a bank. So when we launched early this year, our direct-to-consumer, our revamped direct-to-consumer business, Go-To Bank, right? We have the word bank in our name, and as does Varo. I think we're the two, quote unquote, challenger banks out there that can actually use the word bank, because we truly are banks. So that's I think a very, very valuable asset when you talk about providing inclusion and making sure our consumers are not left behind. They have true demand deposit accounts, not just a prepaid debit card when they bank with us. You take our bank, and then you take our 90,000 points of retail distribution. Again, I say, 90, that's more than all the bank branches in America combined. And, and they're open 7 days a week for the most part. So the ability for that consumer who's working 2 jobs to be able to come in the morning to take the cash that they got from the tip jar and deposit that into their bank account at one of our locations is extremely powerful. So I think as we're driving innovation, and as we're creating seamless and affordable and secure methods of moving of money, we always have to remind ourselves is that the whole world isn't 100% digital, and you have to always think about meeting that consumer where they are.
Yeah, thanks. I think we're all saying and agreeing that FS organizations have a key role to play in leveling up society. So with that, Colin, what advantages do digital banks like Varo have in advancing diversity, equity, and inclusion relative to the more traditional banks or fintech players?
Well, I think we've seen now we're kind of in the second chapter of digital innovation that's providing greater access, and it started with a series of point solutions around whether it's access to credit or payments or small dollar lending, other things, and it's now evolving towards more of a rebundling, as we talked about earlier. What are the core needs and pain points that customers are trying to solve, and coming up with more holistic solutions and being able to deliver them through lower cost platforms. And I think and it's going to be interesting to see how the next few years play out, but there are some inherent limitations when you're working with a bank partner as opposed to being your own bank, and part of why we chose to go the path of becoming our own bank, because you're subject to all of you really can only offer what your sponsor bank has been permissioned by their regulator to white label, versus being able to have a wider charter to solve a much broader set of needs. And I think so it starts with sort of access, but there's also the piece around when you are regulated, customer treatment and addressing, and always thinking about customer harm, and like how these are many cases customers who need access to their funds. I think we're subject to a much higher level of oversight and scrutiny, which ultimately makes the bank that much stronger and that much more focused on delivering for our customers. And so I think that piece of it is going to be important as well. But I do think it starts with access and delivering the products that customers need, and delivering them in a bundled way that they don't have to actually have 12, 15 apps on their phone to solve everyday problems, but they can just have a provider who can present a holistic solution. And so I think this is kind of, when I think of the future, obviously I'm biased, and we chose to become a chartered bank, but I do think we'll have an advantage in this space, and it's going to be interesting to see as it continues to evolve.
Thanks, Colin. A recent literature review of diversity and inclusion in the workplace undertaken here in the UK by the three main financial regulators found that diverse teams can have, difference of opinions, but actually are more innovative and better at solving problems creatively. So for you, John, how important is diversity amongst your teams in order to build, inclusive products and in fostering innovation more broadly?
Yeah, that's a fantastic question, Noeleen, and as we're reflecting on it here before the panel, the diversity for us it's a business imperative. It's actually core to our strategy, right? So if I just take a pure business strategy view of it, we're building a global payments network, right? Trustly operates in 30 countries today, right? So that's different banking systems, regulatory environments, competitive landscapes, right? The merchants have slightly different needs. Consumer preferences are different across those markets. And as I sort of said before, right, we actually have to abstract away from that complicated, noisy environment to build something that works and that is truly inclusive for everybody. So we need to understand our markets, right, and our merchants and our consumers deeply. And so, our cultures and our backgrounds, they mirror the constituencies that we serve and they mirror the countries that we're in, right? So we've got about 750 employees today. We have 50 nationalities. We operate in all these different markets. So diversity is just the diversity comes from the business that we're in and the strategy that we're playing, right? It's in our DNA as a business also, right? So the company's roots are in Sweden, right? Small country, necessarily open to the world, right? Highly effective at building global businesses. Also the US and Brazil. Right. So that was in the merger between Trustly and Pay with My Bank, 2 years ago. And Pay with My Bank is a Silicon Valley company whose engineering capacity and organization sits in Brazil. So right there, just internally, you've got three very, very clear sort of centers of gravity in terms of national culture and communication style and everything else, not to mention the diversity of sort of ethnic and religious backgrounds and cultural backgrounds. Right? So we knit all of this together by having a very clear common mission, right? By having a very clear sense of what the company culture actually needs to be so that we collaborate well. And ultimately so that we're able to ingest, the needs again of the markets that we're serving to build, a payment and data solution that just works, for everybody. So it's inherent in the business strategy. Right? I'll maybe mention one other thing too, because, diversity also means, I'd say getting the best, and specifically also looking at what we're doing with folks who are maybe traditionally, underrepresented. So we do have, we're growing fast, right? We're hiring across all markets. And so we need to be very, very open, in fact, deliberate about saying, we need a broad talent pipeline, right? For every role, right? Whether it's a frontline role or whether it's a senior executive role. And so we deliberately sort of over-index towards having diversity in the talent pipeline. And then we keep ourselves accountable internally to who actually makes it into finalist roles. So again, today, 50 nationalities, really strong gender balance. I'm particularly proud of the very strong mix of great female executives that we have in leadership roles at the company. The diversity is essential. Functional diversity as well, right? What are we doing? We're bringing together technology. I have a software background on a bit. It's technology, financial services, a regulated business. And then, Dan, sort of building on what you were saying, right? We're operating in a world where everybody has a computer in their pocket. And so that consumer grade experience of the product is absolutely essential. And you don't get that by hiring people from a single vertical, right? You got to have people who are, very, very deep in consumer insight, fantastic, technologists who can drive high availability at global scale, right? And the really deep regulatory and sort of compliance insight so that we're actually operating cleanly in all these different markets. So yeah, diversity. Yeah, you can't rely on speaking the same language and having a common set of assumptions. You have to be very thoughtful to create that, to actually be able to make it work.
That's great, John. I love the accountability and also the passion as leaders of organizations to drive this forward is really key. KPMG here in the UK conducted a recent CEO survey and found that ESG issues continue to be at the top of the agenda. And there is real pressure on businesses to be the driver of change, to tackle climate, societal issues, and support a just transition. And this sentiment is also echoed in the US, with 91% of CEOs stating that re-entering the Paris Climate Agreement will cause their company to be more stringent in their ESG practices. And so, Colin, as a CEO, how do you see your organization and banks leading the way advancing climate action and private sector sustainability efforts?
Well, first and foremost, I think, we all have to act. I mean, this is something that I think should be close to all of us in terms of what's happening in the global climate and the steps that we need to take. And consumers are demanding it. And I think there's definitely a role that each of us and the banking industry at large can play. And it is interesting to see some of the exciting innovations that are happening, and even per the conversation we've been having with the emergence of digital banking and less usage of cash, digital marketing. I think about my early days in my career where we were dumping out hundreds of millions of pieces of direct mail. I mean, some companies are still doing that, but I won't let my team do direct mail because I think just the climate impact of that. We're looking at digital card strategies and how do we reduce plastic usage, or are there opportunities to use recycled plastic? We don't have branches. Dan does the cash handling for us. We don't handle cash, but that's another impact on the climate, and all of these things, and thinking holistically around how we can reduce our carbon footprints. And I also think there's some interesting innovations that can be pointed to, like in Singapore, for example. UOB just announced that its retail banking customers across Asia are able to access personalized carbon insights based on their spending and savings behaviors. I mean, so it's an interesting example. I mean, McKinsey just published a study that said the introduction of climate impact accounts are potentially a huge, maybe up to $60 billion revenue pool as consumers choose bank partners that help them understand their carbon footprint and make better decisions around their budgeting and spending. So I think there's a whole series of things that we all can do. I mean, I do believe some of this next generation players that we've been talking about, just inherently are going to have a lower carbon footprint because we're digital, and so I think that's going to be important. The other thing I would say, we're really proud that, we're a portfolio company of the Rise Fund, which is the world's largest impact fund. They've just started a new climate fund. We work closely with them, as well to think about how we can extend our impact. So these are urgent issues that all of us need to be thinking about. And I think the banking industry certainly has an important role to play.
Thanks for that, Colin. A big, responsible, accountable role as people keep putting on the foot of financial services to drive this. Yes, climate is very, very important, but beyond environmental and social aspects of ESG, there is the governance, right? And which is clearly very relevant for the financial services industry. It's heavily regulated. And just coming to yourself, John, how do you view your role in governance at Trustly? And we have probably a 1 minute on that one because we've got bit short on time, if that's okay, John.
Okay. I'll keep it quick, but I mean, look, governance is essential, right? To the mission that we have, right? To ubiquity. I love it, actually, Colin, your mentioning of consumer harm, right? So we embrace, I would say, governance and compliance at really all levels in the business. In fact, in North America, we've just kicked off the process of getting money transmitter licensing. Why? Because we like, frankly, the enhanced level of scrutiny and discipline that it brings to all of our operations and our ability to innovate even faster in some of our product lines. We're a regulated operator, right? We're a licensed financial institution, so we're conservative by nature on that side. But we're also a fintech, and we're innovating fast, right? And so part of building, the payments that work across the 30 markets is that we have to be compliant everywhere. So internal governance it has to be embedded at every level in every process, right? So we have to be externally oriented and aware of the requirements. When we develop products, every feature, of course, and every flow has to be vetted, but we also have to adapt our products as the regulations change across all of those markets, right? When we go to market, we have to be very careful about who we serve on the merchant side in particular. Right. Operationally, we have to monitor all the flows, right, and have the analytics and the human reviews, et cetera, to stop issues, stop bad actors, do all the reporting. But from a governance perspective, internally, On the one hand, it's in our DNA and baked into pretty much every process, really from the founding of the company on the companies on both sides of the Atlantic. But we also have an independent governance and reporting structure, right, rolling into our chief risk officer who reports to the board, right? So that is it's a check and balance. It keeps all of us honest and makes sure that even, the internal incentive structures and so forth don't end up potentially, pulling us into risky territory. So there's cost involved. It's also a competitive advantage, right? And it's essential to the merchants that we serve, and it's essential to the credibility with every single banking partner that we have. And remember, everything that we do goes through banks, right? So we have to be leading the pack when it comes to governance and compliance and regulatory.
Thank you very much, John. And just guys, in summary, you talk about leading the pack there. Well, clearly the leaders on this call today are really, changing the playing field, Dan, to steal your words, which is fantastic. You're going to be on the right side of history, as we say. And the big message that you've left in my mind is all around providing access for all, because that's the way that we level up society and make financial services more sustainable, fair, equitable and diverse. Thank you very much to the panelists here today. Dan Henry from Green Dot, thank you. John McLane, Trustly, fantastic. And Colin Walsh of our bank, thank you very much. Alyssa, back to you.
Thanks to you, Noeleen, for moderating this session, and thanks to Dan, John, and Colin for joining us. It was a very interesting and meaningful conversation that really left some food for thought. If you have any questions for any of these fantastic speakers, please feel free to reach out to them directly, either via the networking platform or on LinkedIn. Up next, we have a presentation on managing risk of emerging tech by Niall Coburn, regulatory intelligence expert for the Asia Pacific region at Thomson Reuters.